Okay, so this is a historical trade on Striker SYK from August 17th, 2022 on the first candle. Go ahead and minimize this. So if we're looking at this one, we have the middle of the month of August. But if we were to look at the straight line information, we have one, two, three, four, basically we have four. Look at the daily, actually, I'm gonna lock this all charts. I'm going to come over here to the Russell. Um, okay, give it a second to bounce over to the right date. Okay, we have one, two, three, four. If you look at the daily, we have one, two, threes, and trigger fire down here. Um, and also, if you were to look at the S&P and the comp and the Dow, all of those ones would probably be very similar. So strong market support, straight line information on the uh, on the market and also on the stock itself. Look at earnings; they were on the 26th, so about a 3 weeks ago or something like that, a miss. So let's come over here to the weekly. We have a declining 21 right here. So I set a red and then a doji or a white. So probably come back and then maybe kind of fluctuate between those two. Okay, if we go to the 3 day, we have one right here on the stock RSI. On the daily, we have one on the stock RSI at the MACD and the trigger fired. So that's about 5 pieces of hard evidence. Yeah. And so it's a trade. When I was thinking about the concerns, I thought about the 21. Well, this is sitting on this 13, which could act as a support line. And then we have the 21 also. However, it's kind of flat. The daily, we're right above this 987, so that would be a support line. Even though it hasn't been above it very long, but it's been along that 987 line for a while. And there's some other support, right here on the 3 day. So if you were to do like a predictive paragraph, you could say in the 3 day period, it may stay on this 13. Let's say probably in the 3 day three candle period, it will decrease to the 233's 21 moving average line and also the rising um, 13 on the daily and pause. You may have to get out there. And actually, this 34 could also be, it could be pretty close actually. So those are all support lines. From there, it could decline to this 987 line and pause. Again, this 13 will probably be higher than that by that point. From there, it could decline to the 233's 144 and pause, or you may have to get out of there. And the 21 here, the 21 on the daily would also be involved at that point. So, and from there, it could continue down to this bottom Bollinger Band, whose shape and trajectory would be a little bit different by then. But we'd have the 377 on the daily on the 3 day. So it didn't really seem much too likely to go much further than that. In my practice, I said purchase the week one September week one $215 puts. Seems a little bit ambitious actually that it would make it all the way down to 210, but that's what I did. Maybe now I would do. I'm not sure. I think this is probably um, every $10 on Striker, so maybe just the 220s. But anyway, so let's just see. I'm going to throw a vertical line right here, and let me see what happens. Okay, good. So in the seven, you don't really have to do the 7 hour rule. There's 5 pieces of hard support, but we're taking a look anyway. So it made it to the 344. We'll go two more. So this is the 3 candle period. So this is about what we said in the predictive paragraph, basically on the 21 and then right here on the 13. So that's we're online there. As far as exit criteria, almost cocked here. We have this on the bottom wick on the rising 34 in the auto wave line on the current candle. This one, we have the 987 bottom wick and the 34. We'll just count that as one. So 1, 2, 3, 4. I guess we could count that as close enough. 4. But stay in, go to next candle. So auto wave on the previous candle or on the 34, that's 2. 3, I think I missed this one. Actually, less than 20. Less than 20, so that makes 3. 4, definitely cock now. Continuation, continuation. 5 right here. 5 pieces of exit criteria is what I have. We'll continue forward to the 8 to the Monday candle, first candle 822. So from here to here. So this one we have the auto wave line, the 144. We have the bottom Bollinger Band. We have less than 20, not really quite crossing. Um, Cocked. We have continuation here and here. So we still have continuation. I'm counting 4. We're below this line. So really no exit criteria on the daily. I'm going to count that as 1 right there on the 377. So that makes 5. 5 pieces of exit criteria. We'll go to the Monday afternoon, second candle. So very similar. We'll call the 144 bottom Bollinger Band the down auto wave line. It's possible, I guess I could 211 right here and low 211. So I mean, not it didn't officially touch, but it's basically a touch. So those could count. Both of those could count. Maybe together those. So that'd be 3, 4. I guess I could count that as almost crossing. I wouldn't for entry probably, but 1, 2, 3, 4, 5, 6. 6 pieces. 7. We still have continuation. Continue on with the trade. I guess in my practice trade, I think I exited around here, but when I was reviewing it just a few minutes ago, continue on to Tuesday morning. Bottom Bollinger Band. We have the down auto wave line. Really, this doesn't. I don't really think that would count because we're well below it. So 1, 2, 3, 4, 5. Continuation. Continuation. 6, 7. Now there's a down auto wave line. 7. Almost cocked. I think we had the 21, the 30, 13. So I think this would be a good place to exit. Very good exit. So with the 215 puts, this would be great. For 220 puts, this would be great also. Um, so what did I learn, I guess? So the support lines did take some time to kind of pass through right here on both the 233 here on these lines. So that took a little bit of time. I think what I'm kind of really noticing is the slope of these. Very often the 21 and the 13, at least in my experience, are often the nearest support lines or resistance lines for a call. And so the slope of those seems to make I mean, it's not a slam dunk or anything like that, but when they are flatter, they're much more likely to be able to pass through. If they're vertical, if they're steeper going against, like if it's steep going up for a put or steep going down for a call, those are much less likely to push through in my experience at this point in my understanding. Um, these indicators on the various, let's just jump back to the beginning here. These indicators are definitely pushing down, down. This was ready for a turn. I mean, it looked like it could have been ready for a turn. Let's just jump back up to the, okay. So I think this is where I said exit, which would have been, exit on this. So we're exiting at the beginning of this candle, and that would have been perfect. Um, I think actually it continued on. Actually, what did I say? No, I think this is actually what I said. I could go back and watch my own recording. Um, yeah, but that was basically the end of the move. So it's a good trade.